Hello, my friends. So, welcome back, right, to another week of our weekly market analysis. And this week, right, I would say last week, right, we had one of the worst 5 days in equity markets, right? The sell-off was brutal, and man, it's like a tadpole being smashed by a rock. But don't worry, you're not a tadpole, you're a trader, and you're going to capitalize on this kind of trading opportunities in the market. So to start things off, right, we'll be talking about the S&P 500, and I'll share with you on how you can actually look to long this the S&P 500, and also how you can look to short, right? Because I'll share with you why you can go both directions in a while. And on top of it, I'm going to share with you a potential trading setup on this currency pair, which has been ranging over the last 9 months, and on Friday, it finally broke up. And I want to share with you why there is the possibility of it rising almost 1200 pips over the next few months. So again, right, I'll go through with you that currency pairs, share with you how I'm going to trade it. So all this and more in this week's market analysis. It's going to be a busy week, and I'll see you there. Okay, so first up, what we are going to talk about is actually the stock market. Because if you've been following the news, the media, whatsoever, you probably would have heard by now that they have said that over the last 5 days, right, from the opening in January 2016 to where price closed on Friday, which is these five candles here, 1, 2, 3, 4, 5, right, from here to here, this is officially the worst 5 days on any period in history. So as you can see, right, clearly why they said so, because you can see the sell down over here, which is so massive, right? And it just happened during the start of a new year, right, due to China whatsoever, blah blah blah, right? So that aside, right, aside from the news, right, what I want you to focus on is price itself, right? Because this is all that really matters, right? The news don't matter, the historical facts, the stats, all this doesn't really matter, right? What matters is what you're seeing right now in front of you. How are you going to interpret the information, and how are you going to use it to make your trading decision? This is what matters. So let me share with you on how you can go about trading the S&P 500. So what you're looking at right now is the S&P 500. This is the daily chart. So for a lot of traders, right, new traders, or maybe even traders who have been trading for the last 1-2 years, they look at this chart and they look at it and they'll say, okay, right, Rainer, right, I don't see any trading setup over here, right? Maybe I'll go short over here, put my stop loss somewhere here, and my target will be at this low over here. But if I do so, right, you can see that this is your potential reward, and this is your potential risk. And they'll go something along the lines whereby the risk to reward don't justify, so I will not take this trade. So what I'll do is I will just observe the S&P 500, alright, let it come all the way back to these lows over here, see if it gets a rejection candle like a pin bar or engulfing pattern, right, price rejection. Maybe I'll go long, stops below this low, and I look to have price reverse from it and trade back towards the highs over here. So that's the thought process of a lot of traders, right, especially those who are new, because they see a sell down, they have a very fixed mindset of what they want to see in the market. If that doesn't happen, they don't trade it, and that is all fine, right? But for more veteran traders, for traders who know how to adopt and use multiple time frame analysis, they know that they can actually find trading opportunities on the other time frames, and this is what I mean by it. So first up, right, as I've said earlier, right, one possibility, right, for traders who want to adopt a longer term position is that they'll wait for this area, right, this area of support, let price comes into it, wait for a price rejection. It can come in the form of a pin bar, an engulfing pattern, right, and they see that setup, they go long and anticipate that price will reverse and go back all the way towards this high over here. So in the meantime, what happens if that you are a trader who is I would say more shorter term, right? You want to trade short in the immediate term, right? In anticipation that price will trade lower and retest the lows back over here. What can you do then as a trader? And this is what I'm going to share with you right now, right? On the daily chart, the bias of the S&P is towards the downside. But again, right, as I've said, right, you don't have any trading setups down here. So what you can do is go down to a lower time frame, right, the 1 hour chart, and you can see, right, on this 1 hour chart, clearly right now there is something that actually makes sense to you, right? This red line here is the 20 period moving average. The blue line here is the 50 period moving average. So what you can see on this 1 hour chart is that, right, this is trading what you see, not what you think, right? I'm not guessing or predicting. I'm just sharing with you what I see. I see that the 20 and 50 period moving average, right, the zone between them is acting as dynamic resistance. So this is an area of value. If you want to go short, the zone between the 20 and the 50 period moving average, they are currently acting as an area of value on the 1 hour time frame. So if you want to go short, needless to say, you don't want to go short right now when price, just traded lower over here. You want to wait for price to come into an area of value, let it retrace back towards the 20-50 period moving average, say somewhere over here. And this is where you can look to get short the market. So there are a few ways you can go about it. Number one, you can just simply place a sell limit order at your 50 period moving average. That's one. Another way you can go about it is for those who likes to wait for a candlestick confirmation. They can wait for a price rejection like a pin bar or something like this before they go short. So there are a few ways you can go about it, and there's no right or wrong. So what I want to highlight out to you is, to understand the market from multiple time frame analysis, right? Instead of just focusing on one time frame, you can actually use the different time frames and identify your trading setups, right? So this is a little bit more advanced. So for those of who are new to trading, I wouldn't recommend doing this straight away. But for those of you who have already been seasoned traders, right, and hoping to find more trading opportunities, because sometimes, right, you're waiting on the daily charts, waiting forever, right? This is something that you can consider. Okay, so this is the S&P. So I understand there are traders, from the US, and there are some traders from the Asian continent. So if you're from Asia and you may not have the opportunity to trade the New York session, another thing you can look at is the Nikkei, right? So this is the daily chart of the Nikkei 225. It's the Japanese stock market. Again, it offers a very similar setup to the S&P. In fact, it's coming close towards the daily support area. So longer term traders may want to pay attention to this area. But in the short term, right, over the next 1-2 days, right, the 1 hour chart you can see over here is still acting as dynamic resistance. So if it retraces back over here, you can possibly to look for a short opportunity, right? And I would say be quick, right, with taking your profits, because if you look at the daily charts, right, this is where buyers may potentially come in. So you want to be either setting your stops to either break even, right, take partial profits, or take full profits as price comes into this area of support. All right, so trade management wise, again, there's different ways you can go about it, and it's impossible for me, to share with you all the different variations, because it's just impossible. So ultimately, you have to find something that suits your, number one, your personality, number two, your risk management, and number three, your interpretation of the price action of the markets. Okay, so up next, I want to share with you a forex currency pair that I believe that a lot of traders are not looking at right now. Right, it's none other than the euro pound. You look at the euro pound. Okay, let me scroll a little back. It has been in a range, right? This, mind you, this is a daily chart. Okay, it has been in a range, right? This is the resistance, this is the support. In a range for the last 6 months. I think more than that. This is March 2015. Okay, now it's January, almost 9 months, right? In a range for 9 months, the euro pound. And what happened, right? This is a basic fundamental of the market. The longer that price range, the harder it will break out, right? This is a fact. I didn't come up with it, right? If you don't believe me, look through your charts, right? See how long a particular product or instrument has been ranging, right? Whether 1-2 years, and look at what happens when it breaks out after in a range for 1 or 2 years. You can see that usually the breakout will be very powerful. That's usually what happened more often than not. So you can do your own research and let me know what you think about it. So this is based on my own research, and I realized that the longer price range, the harder you'll break out. And if you look at euro pound, on Friday, it broke out of resistance. So this is key, right? It break and close above the resistance area. So again, there are multiple ways you can go about it, right? Some traders basically got their entry by placing a buy stop above here. Perhaps their stop loss is 2 or 3 ATR away from their entry, and they are long. And then there are traders like me who wants to get long, but not long yet, right? We want to get long, but we are not long yet. So here is what you can do, right? If you want to play the upside on euro pound. Because if you look at it, the daily chart, let me walk you through two potential scenarios, right? The first thing is this. On the daily chart, what happens is that on Monday or Tuesday, you get something like a inside bar, something like this, right? Where price is, have a very tight range. Or maybe Tuesday, you get a very small range retracement. Then on the third day, right, you get a breakout higher. So what happens is that basically it's giving you something somewhat of a flag pattern, right? A flag pattern usually have more retracement, typically a 3 or 4 days retracement, right, against the underlying move. Then it breaks out higher. So for me personally, I do not have to wait for 3 or 4 days, right? If I get an inside bar over here, for example, this bar on Monday, say inside bar, something like this, I'll be looking to place a buy stop order above this high over here with a stops of 2 ATR in anticipation of higher prices. If price doesn't, break above it and it starts retracing a little bit more, a little bit more, and I get somewhat of a flag pattern, again, my buy stop order is over here. I'll look to get long if price breaks above it. So that is number one, right, on how I'll look to trade the euro pound. Number two, right, second way you can go about it is again, right, using multiple time frame analysis, right? You go down to the 4-hour time frame and you notice that the 20 and 50 period moving average over here is acting as dynamic support. So needless to say, if on the 4-hour chart price it does retrace lower back towards the 20-50 period moving average, it's an opportunity for you to get long as well in anticipation of higher prices. So there are, usually, 1 or 2 ways to go about, entering the trend. There is no right or wrong, but ultimately, right, you as a trader, you need to find a trading approach, right, a technique or entry that actually makes sense to you. So what I've just shared with you is 2 potential setups that makes sense to me. All right, there are more variations, right, but obviously I do not mention them because number one, maybe I don't believe in them or I don't trade them myself. So why do I want to share something that I don't really believe in? So what I've shared with you is actually the stuff that I use over and over again. Are you with me? Okay, so this is the euro pound market that I want to talk about. And what's really interesting is that you look at this on the weekly chart. This could be the start of something really big because we have this breakout over here on Friday. Again, right, this breakout, right, I could jolly well be wrong, right? It could perhaps, be a false breakout where the following week price then, reverse all the way back lower and close lower over here. This could potentially happen. And this is why you hear me say this over and over again. Always have a stop loss in place because there is no 100% in trading, right? You're dealing with probabilities, never certainty. So always have a stop loss in place, number one. And number two, when you want to put on a trade, for me personally, I risk no more than 1% on each trade. Meaning if my account is, let's say, $100,000, each trade I lose is not more than $1,000. 1% of my initial capital. So if you follow these 2 rules closely, all right, I would say that, you would have a very good chance of survival in the long run, right? You wouldn't blow up your account because, all right, these are really very 2 powerful rules. So I want you to, ingrain this into your head, right, into your mind, into your heart. So where was I? Okay, so I was saying, right, euro pound, this could be a potentially big move because why is that? If price breaks out over here and it can actually, retest back towards the highs over here, this is potentially a 1,200, let's round it up, 1,200 pip move. A potential 1,200 pip move, right? If price retrace back all the way back towards the highs over here. So this is why I'm really excited about this euro pound setup. And you can see that it has been in range for really quite a while, 9 months over here. And it's the longest over the last, I would say, 2 or 3 years. Usually when it ranges, it's just for, a few months, then it break down lower, range for a few months lower, few months, then it breaks down lower. For this time, right, it ranged for a really, really long time, right? Price tried to trade lower once, twice, thrice, couldn't get lower. So as of right now, all right, the path of least resistance, if you ask me, is towards the upside for euro pound. Okay, so let's move on to the last market that I want to talk about. Right, the last market that I want to talk about is none other than gold. So there's no trading setup over here, but I just want to walk you through the thought process of a trend follower, a trader. So if you look at the chart of gold, the weekly chart, you can see that it's in a downtrend. Right, if you can't tell this is a downtrend, then just some guidelines is that you see lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. So if you see consistent lower highs in the market, it is in a downtrend, right? There is no 2 ways about it. And on top of it, if you notice the 20 and 50 period moving average, right, the red line here and the blue line here, they are both pointing lower over here. So it's telling you that on the weekly chart, right, the short term and the medium term trend is towards the downside as well. So that said, I don't trade the weekly chart, right? But what's interesting to note is that it's currently retracing back to an area which is actually significant if you ask me, because it tends to break above the 50 period moving average and then it trades lower. It trades higher, break the 50 period moving average, then it trades lower once again. So this is what I call a false breakout, right? Another false breakout, then it trades lower, another false breakout, and then it trades lower. So my guess, right? My best guess is that in the coming weeks, we would see a move higher on gold, do another false breakout, and then we can get a shorting opportunity back lower once again. So this is my so-called quote unquote prediction for gold, and we'll see what happens next. So yep, that's all I have for you in this week's market analysis. I hope you find it useful, and if you do, right, you can actually get weekly updates to my videos for free. Just hit the subscribe button at the bottom right of this video and you're set. That's all right? So, and also, yep, I've just created what I call the ultimate guide to trend following, right? I'll leave it in the link over here on your screen, right? This is the red box, right? This is the link for it. Click on it, get the ultimate guide to trend following, and you have an idea, right? Crystal clear idea of what I'm doing and sharing each and every week. So with that, right, I wish you good luck and good trading. I'll talk to you soon.